All right. Good morning. Good morning. Good morning, radio listeners. Yes. Good morning, radio listeners. This is your host, Phoenix Belfield, and with another edition of the Cooperative Voice Program. This edition of the Cooperative Voice Program is brought to you with a kind compliment of the Dominica Cooperative Societies League Limited in collaboration with Credit Unions of Dominica and M. Laja Mobile Wallet, providing you great technology solutions. In today's program, we'll be focusing a little bit on the credit union model. We'll be asking ourselves about the fit for purpose, and we'll be understanding or trying to discombobulate this whole thing of what the credit union is, what we're supposed to be, and where we are heading. So today, I want you to stay close to your dial. I want you to tune in, share the link with your friends and folks, and to be part of the conversation. If you want to be part of the conversation, you can just simply send a message on any way that you're connected. We're connected on the Credit Union social media page. We're connected on the Cooperative Voice. We're connected on Q95, and also we're connected on Emo News Facebook page. All right. So if you want to be part of the discussion, simply send in a message on any way that you're connected, whether it's on YouTube or Facebook, and you can send a message and be part of the discussion. So just hold on for a second. We'll just pause for the cause, and when we return, we'll be discussing a little bit about the credit union model. So help you understand why we exist and what we're doing.
Let's talk about
L'argent, send me money. Receive money. Send me money. No more hassle. M l'argent, send me money. Send me money. Receive money. Receive money. M l'argent, it's safe and secure. M l'argent. You want to send your money to friends and family. No more standing in line. M l'argent. It's a new digital financial service brought to you by the Dominica Credit Union Movement. Introduces a new wallet solution, M l'argent. Top up friends, pay bills, make shopping easy, extra secure. Sign up is absolutely free. M l'argent. You want to send your money to friends and family. No more standing in line. M l'argent. Download the M l'argent app today. See your credit union for more details. M l'argent, your mobile payment solution. M l'argent.
Okay, awesome. Thank you again for joining this broadcast. This is another edition of the Cooperative Voice Program, and it is brought to you with a kind compliment of the Dominica Cooperative Societies League Limited in collaboration with the Credit Unions of Dominica and the M. Laja Mobile Wallet. Again, like I said, today we're focusing on the credit union business model. We'll talk a little bit about credit union fit for purpose and on why we do what we do. A lot of times we've had instances where we've had to discuss the noise where people are believing that the credit unions have exceeded their reason for being, or they're fitting outside of the boundaries of what the credit union's operation should be. And but at the same time, we've been seeing how the changing landscape is creating additional challenges for the credit union sector. And one of the things that we have set out to do is that, we wanted to look at the credit union business model and to look at it from the vantage point of the dynamics of the financial sector and see how that is evolving with the changing member expectation. And the thing about it is this: whilst a lot of people would blame the credit union and say, well, we're becoming more like banks because we have so many more requirements and stipulations without understanding the changing regulatory framework, it is important to also assess that the impact of the changing consumer needs are also having an impact on how credit unions evolve, how the services evolve, and how they react, and how the different channels that they bring into context in order to fulfill the service delivery for its credit union membership. Meeting these expectations require many changes in operational, in how we change our business, in capabilities, in new processes. It also sometimes requires us to increase our investments in certain technology. And sometimes what we find is that the scale of investments and the resources required to implement these necessary changes in order to remain competitive can be significant. And this is something that's affecting not only credit unions, it's affecting all service providers, banks included, MFIs, MSBs. All of these institutions that are providing financial services are uniquely impacted, but particularly so in the context of the credit union, because we have been known to be uh, village financial institutions, community partners. And as such, we have for a long time foregone the need to be innovative, and we've pressed ahead with the need to reach the members at the greatest point. And sometimes, in an effort to reach the membership and to be able to provide for them, we do not necessarily take as a top priority our bottom line. How much profit can we generate from this? How much surplus? Instead, our focus are largely based on is largely based on how can we provide this service to the membership. And as a result of that, our 60 plus years of service to the membership have shown us that when it comes to enhancing the competitive side, that can take a hit if we don't focus on our processes and operations and cost and so for operational capability. And so for us, our core savings and loan business model has remained largely unchanged for decades. And you will find that, particularly so in the context of Dominica, where many will argue, but the credit union is so big, they're so large. But many of us will forget that just a few years ago, we were 21 plus credit unions, and we've since amalgamated. So we might have six larger credit unions, but it is not so significantly large as compared to when we had the when you compare to other jurisdictions. So yes, we have a large penetration. And a lot of people would look at our balance sheet and say, hey, we have so many assets, almost a billion in assets under the sector, and so forth. But really, when you look at the asset category, what does it comprise of? Loans, properties. Yeah. So we need to understand from a credit union context how the business model apply to our operations. And so when you say credit union have a lot of money, whose money are we speaking of? Is it the CEOs or the board of directors? Or is it the membership, the farmers, the teachers, the minibus driver, the mom and pop shops that are selling on the roadside vendor? These are the people that come and put their fund into the savings. We do not have a large corporate footprint because the most small businesses can come into the credit business is having their owners establish deposit accounts. A business cannot come into the credit union and get a loan. A business cannot be a member of the credit union. It has to be the individual members or the owners of those small businesses. So a corporation cannot come and apply for membership into the credit union. They cannot come and take out a loan. So it's the individual members that make up their savings, their life savings, the MRAs, and they are the ones that come into the credit union and take out loans. So we have to understand it, the model, the credit union model from this context. But one of the things that we must also take into consideration, and that is also critically important, is the legal framework governing the credit union business model, which provides significant limitation as to what we can do as a sector. So, for example, whereas other financial institutions can 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 invest elsewhere and invest in mutual funds and those kind of thing and issue shares and issue bonus shares, we cannot do so. In fact, in Section 120 of the Cooperative Societies Act, the revised laws of the Commonwealth of Dominica, it stipulates how investments are funded. So when you put your savings in a credit union, there are very limited options in which we can invest those funds. And in fact, in section 121, it says the board shall establish written policies to invest the income, the accumulated funds of a cooperative society not used in the primary business. So outside of giving membership loans, there is a mirage of limitations of where the credit union. And let's just look at a few of them so that you can understand where the credit unions can invest. Well, for first, it says we can invest in any cooperative society or stability fund established under the Cooperative Societies Act. So, a central credit union, a central finance facility, deposit guarantee stabilization fund, or credit unions, that is where the credit unions can invest. They can also invest it in security of any cooperative society. So any similar cooperative society established under that act, we can invest. C, any financial institution established under the Banking Act. So the act gives us prerogatives to invest in other banks. For example, like many credit unions in Dominica, in fact, I think all of the credit unions invest in the National Bank of Dominica. So we can invest in any licensed financial institution established under the Banking Act or any company registered under the Insurance Act. So insurance company, banks, we can establish. Stock debentures fund security issued by the government. So issued by the government of Dominica, the government of the OECS, we can invest. Securities of CARICOM member states, we can invest. All right? And real property provided under the section 199 of the Act and any other thing permitted by the registrar. So our investment doesn't get creative. Our investment is limited to banks, cooperative societies established under the Act, insurance company, financial institutions, and securities by the government. Outside of that, we can only make money via loans to our members. So it is important for us to understand that within this context, the limitations placed on credit union and cooperative societies, not only in Dominica, but also across the OECS, in terms of where we can invest and what we can do. And that is why with the growing need for the credit union membership and the diversification of those needs, require the credit unions to become innovative, require the credit unions to now start to offer online services so that members can access, because the younger generation, the Gen X and the Gen Z, are requiring credit unions to become innovative. They're saying they want their money now. They're saying that they want innovative services. They're saying that they want the credit unions to meet them at the point of their greatest need. They're asking for cutting edge technology, and credit union must be able to provide those services. So, when on one side you have a credit union movement that is constrained and where it can invest and what it can do, and on one side you have an emerging need, dynamic market that is evolving, you can understand the quagmire in which our credit unions face today or find themselves today. But it gets even more interesting when you consider that the credit unions offer the highest savings rate of all financial institutions on island. So, as popular as we would say, we have become the savings institutions of choice, but the lenders of last resort. So everybody's coming and pool their money into the credit unions because we have a superior savings rate. In fact, as of late, you have other financial institutions that have actually dissuaded people from putting their savings by them because of the cost and because savings rates are dropping. But the credit unions offer superior savings rates, and that is why the savings are increasing in the credit union. But what happens when a member comes and places their money at a credit union? What happens? The credit union have to find a way to employ those funds because we have to pay the savings. And that is why it is so important why we encourage our membership to go to the credit union and take out loans. Because we have to be able to unlend, or else we'll end up being unbalanced with high liabilities and uh, high operational cost and lower loans, which means that if we get lower loans, means that our income from lower loan interest is going to be significantly lower, which is going to impact our ability to pay dividend and to remain competitive. And so that is why you find a lot of your credit unions are introducing risk based loan systems where we're saying, because a lot of our members are saying to us, listen, what the alternatives out there are superior. We have mortgage rates low as 4 point something and 5%. And so the credit union is like 5% and 6%. So we have to get competitive. And they said, listen, I'm a good borrower, I'm a good repayer of my loan. Why do I have to incur the same rate to everybody? And so that is why some credit unions are looking at the risk based approach to lending. They're saying, listen, once you meet certain criteria, this is open to everybody. There's no discrimination. Once you meet certain criteria, we will assess your credit worthiness and see how best we can offer you a competitive rate. All right? Because this is how the credit union needs to evolve to remain competitive. Now, think about it over the last couple of years, in fact, the last 3 years, the average mortgage interest rate was about 7.5. Now, almost all credit unions are under 6%. So we've dropped significantly interest rate across the board. And that is why when we speak about credit unions and the evolution of our services, we cannot just look at it from a tunnel perspective of the balance sheet item as to the number of assets we have or the savings. So we have to look at it from the vantage point of the limitations placed on credit union and how our business model is affected by those limitations. And then we have to also focus on the context of the growing regulatory requirements in credit union that increases that cost because we now have an overhead, a compliance burden in which we now need to have, in some cases, compliance officers, alternate compliance officers. We have to employ risk based strategies for our portfolio. We have the advent of COVID-19, which under the previous model, IAS 39, where only when we make provisioning based on when the loan was impaired, or that's just a fancy word for when the loan goes bad. Now on the IFRS, we need to look into that glass and be able to predict and make provisions from that prediction, which is on the IFRS 9 is called expected credit loss. And what that does to us is that it removes some of the surplus away from what we could have declared to dividend. And we have to now make provisions for impairment, or what we would see. We need to begin to foresee those loans that we think may go bad. And so this is how the ecosystem is evolving. And the credit unions are constrained by a lot of these. So when your credit union approach you and say, hey, listen, come into us. Let's talk about delinquency. Let's talk about how we can help you to go back on the right footing and help you. You go into your credit union. You don't wait until your loan becomes bad or you become unemployed to go into your credit union. You know your situation. Go into your credit union and talk to your loans officer as to how we can serve you better and how we can begin to put your loan in good standing. So these are just some of the context. So we're almost out of time, but in another discourse, we will get into the nitty gritty of the fit for purpose because we want you to understand how is it that the credit union exists, why we exist, why we do what we do. And so you don't allow yourself to be drowned out in the noise of, oh, the credit union have a lot of money. When people say the credit union have a lot of money, you need to ask yourself, whose money is it? Is it the board of directors? Is it the supervisory and compliance committee, the credit committee? Or is it the mom and pops, the mom and pop shops? Is it the roadside vendor? Is it the minibus driver? Is it the farmer? Is it the teacher? Is it the clerical worker? Whose money is in the credit union? And so when people bring to you the context of a large asset size and savings, we need to educate them because this is our own. It is mine, it is yours, it is your neighbor's. And so we need to understand the credit union model for us to understand the issues that we face and why is it necessary for regulations and interventions to take cognizance of the uniqueness of our business model and accordingly work with the sector so that we can evolve as a financial unit and as a financial institution. All right. Until then, thank you for staying true to the broadcast. Thank you for supporting your credit union. And come back next week. We'll get a little bit more and we'll discombobulate the noise and help you understand the credit union model and how credit unions continue to serve you over the next couple of years and decades to come. So until then, go and if you don't have a credit union account, go open a credit union account. If you haven't taken a loan at your credit union, go and see one of your credit unions. We have, I used to say 25 branches of branches. Now we have more branches because we have branches opening in Grand Bay. We have branches opening in Pottersville. So whilst other financial institutions are pulling themselves out of the market, your credit union is expanding to a location near you. So let's meet again next week and let's discuss how we do what we do. Let's discuss the credit union model and let's see how we can help Dominica and the world understand why we are and how we are and why we do what we do and understand our true purpose. Until then, thank you for joining the broadcast. It's been a pleasure.
Send me money. Send me money. Receive money. Receive money. Send me money. No more hassle. M. L'Argent. Send me money. Send me money. Receive money. Receive money. M. L'Argent. It's safe and secure. M. L'Argent. You want to send your money to friends and family. No more standing in line. M. L'Argent. It's a new digital financial service brought to you by the Dominica Credit Union Movement. Introduces a new wallet solution, M. L'Argent. Top up friends, pay bills, make shopping easy, extra secure. Sign up is absolutely free. M. L'Argent. You want to send your money to friends and family. No more standing in line. No more M. L'Argent. Download the M. L'Argent app today. See your credit union for more details. M. L'Argent, your mobile payment solution. M. L'Argent.